There's a long list of principles that, when adhered to, can help you forge yourself into the greatest trader possible. But in today's video, here's 3 principles that will incredibly change the way you trade. It is one thing to experience real trading conditions, but backtesting will only unlock a level to trading that cannot be compared to having real-time experience when you actually deposit some money into a trading account and then trade the right side of the charts. 10,000 hours of backtesting is nothing in comparison to 1,000 hours of trading in real time. And that is why the first principle is studying past history only makes you feel like you understand the uncertainty of the future. The first thing I want you to understand is no amount of studying can genuinely recreate the fear of having to sit on your hands for a trade to set up, only for it to hit your stop loss within a matter of seconds. I mean, you can basically watch traders talk about what it's like to blow a trading account, but that doesn't give you the emotional scar of someone who has actually experienced what it's like to blow a trading account. I can't tell you how many times I've actually lost my trading account simply because I have refused to take a loss and decided not to use a stop loss, because I'm sure there are a lot of traders who don't use stop losses. Now, studying traders who have had to deal with such psychological limitations makes you feel like you understand the problem, but until you live through it and feel its consequences, you may not actually understand it enough to change your behavior. Now, the ability to explain the past only gives us the illusion that we understand so much about trading, even when that only makes us to produce more mistakes. Because I mean, as humans, we all have the need to believe that trading is a predictable and controllable money making means, and so most times we actually turn to authoritative cues that actually promise to satisfy that need. And that brings us to the next principle we want to internalize, which is, if you don't take a small loss, you will take the mother of all losses. The statistics have actually shown that as much as 95% of traders actually lose money in the market, and many of these traders actually lose money not because they didn't have any winning trades. I mean, some traders actually won more trades than they have lost, but in the situation they lost some money, their trading account was actually wiped out. And the problem always starts from not accepting losses. Now, the lesson to draw from here would be, you cannot solve a psychological problem from a technical standpoint. A good trading plan is only useful if, now I repeat myself, if it can survive a future that is filled with uncertainty. So that basically means a good trading plan doesn't pretend that there isn't a chance for losing trade, and most times most blown accounts begin with you getting into a trade that was originally meant to be a scalp. The trade goes against you, then you refuse to take the loss and hold the trade hoping it would retrace, and then a couple of pips later you no longer have a trading account. And all that simply because you over leveraged your trading account, refused to take a small loss, and now you have taken the mother of all losses. So having a trading plan and making plans for where price would actually go next is actually very important, but the most important part of every plan is to plan on the plan not going according to the plan, and that's simply to take a small loss and leave for the next trading opportunity. So one of my favorite quotes in trading was always, go hard or go home, but that depends on whether or not you still have a home to go back to after going hard. You see, as traders, there are many things never worth risking your whole trading account for, no matter the potential gain. Hence the need for you to take to heart the last principle: high risk does not guarantee high return on investment. So many traders believe to make money in trading you need to over leverage your trading account, whereas in reality all you need is to take small risk that actually won't wipe you out and allow that risk to compound over time. Now, becoming rich in day trading isn't necessarily about earning the highest returns, basically. So most times the trades that give us the biggest bucks tend to be those hit and run trades where you basically use a very large lot size, and that cannot be consistently repeated, because a lot of traders you actually see flipping $500 to $50,000 wouldn't tell you how many times they've actually tried. They make you feel all that was possibly done very, very, very easily, because you cannot repeat trades like that consistently over a large sample of trades, because it is one thing to make profits, but for those profits to actually multiply, you need to be humble enough to remember that even a 95% win rate strategy can bring you to your knees, regardless of the fact that you have been right 95% of the time. You have to remember that a 5% chance of taking loss, if taken wrongly without risk management, can wipe out every single win if the wrong amount of risk is actually taken. Because the number one thing you need is to survive. You need to survive the drawdown in order for you to be able to continue to experience the winning streaks that would come later on. And survival actually requires humility and fear that what you've actually made can actually be taken away from you just as fast. And you need to create a trading system that can be relied upon and repeated indefinitely. Just for you to be around trading for a long time, you have to be afraid of going out of business, because without a trading account, there's no money for you to invest in, and there will definitely be no return on no investment. So you have to be around for a long time. You have to be afraid of going out of business, and only being paranoid can save you. You have to be overprotective of your account. I mean, not in a bad way, but then just because you had some success yesterday, that doesn't translate into tomorrow's good fortune. So I think that actually brings us to the end of this video. If you haven't subscribed, subscribe if you haven't. And there's a free Telegram chat where I basically share forecasts of my trades, and if you would like to see some of those trades, there's a link to the free Telegram chats on Instagram, or probably in the description. I will link that below, and I'll see you guys in another video. I hope you enjoyed this one.